Welcome. Today, we're setting off on a grand adventure. One that's a little different from your usual day out. Instead of rolling hills or sandy beaches, we're heading into the bustling, unpredictable world of trading markets. It's a place full of excitement, surprises, and plenty of lessons to learn along the way. So, are you ready for a trip into the world of trading? Imagine packing your bag, not with sandwiches and maps, but with curiosity, a dash of courage, and a sprinkle of clever thinking. That's all you need to get started. Trading is a bit like inventing. You put in a little, hope for a lot, and sometimes things go brilliantly or hilariously wrong. Just like an inventor tinkering with gadgets, you'll have moments of triumph and times when things don't quite go to plan. But every experiment, win or lose, teaches you something new. At its heart, trading is about spotting something you believe will go up in value, buying it, and hoping others will want it too. It's a bit like finding a rare cheese at the market. If you think it's special, you grab it before anyone else does, hoping its value rises. But let's be honest, with just a few quid, it can feel like you're trying to build a rocket with a spanner and a handful of screws. The dream is big, but the resources are small, and that can be a bit daunting. Now, what if you could control a whole lorry load of cheese with just the money for a small wedge? Sounds impossible, right? Well, that's where a clever trick called leverage comes in. It lets you punch above your weight in the market. Leverage is a tool that makes your small pile of coins feel like a treasure chest. It multiplies your buying power, so you can take bigger swings than you could with your own cash alone. Think of it as a ladder to reach the highest apple on the tree. Super helpful, but you need to use it carefully. The higher you climb, the more you can gain, but the further you could fall. Leverage lets you stretch your money to reach for bigger opportunities, making every coin work harder than you ever thought possible. It's like turning a single coin into a team of coins, all working together for you. But like any powerful tool, it must be handled with care. A ladder can help you up, but you can tumble down just as fast. The risks grow as your reach does, so balance and caution are key. Leverage can turn small wins into big ones, but also small mistakes into big losses. It's a double-edged sword, exciting but not without danger. So let's put on our thinking caps, gather our courage, and figure out how this all works, step by step. The world of trading is waiting for us. Are you ready? Let's dive in and see what adventures await. Let's get down to brass tacks. Leverage is simply borrowing. But it's not just any old borrowing. It's a clever way to use what you have to get access to much more. Leverage is the secret ingredient that lets people and businesses do things they couldn't otherwise afford by temporarily using someone else's money. You use a bit of your own money plus a bigger bit of someone else's to do more than you could alone. It's like pooling your resources with a friend to buy something bigger, except your friend is usually a bank, a lender, or even a trading platform. It's not just for financial wizards, it's as normal as buying something on credit. Every time you swipe your credit card for a purchase you can't pay for in full right now, you're using leverage. It's woven into daily life, from student loans to car finance. Imagine you want a 100-pound knitting machine but only have 10 pounds. That tenner alone won't get you far, but it's enough to get your foot in the door. The shopkeeper lets you pay 10 pounds and lends you 90 pounds. That's leverage. Suddenly you're able to walk out with the machine even though you only had a fraction of the price. You've controlled a 100-pound machine with just 10 pounds. Leveraged 10 times over, that's the magic. Your small stake unlocks something much bigger. Or think about buying a house. Most people don't have hundreds of thousands lying around. You put down a deposit, the bank lends the rest, and you get to live in a home worth far more than your initial outlay. Suddenly, you own a much bigger asset. Your deposit is just a slice, but you get the whole pie. Leverage is just borrowing to increase your buying power. It's a way to stretch your money further, to reach for things that would otherwise be out of reach. In trading it's the same. You use a small amount of your own money to control a much larger position. This is how traders can make big moves in the market, even if they start with modest funds. It's the ladder to the apple, the loan for the knitting machine, the mortgage for the house. Leverage is the tool that helps you reach higher, faster. Leverage lets you get a bigger seat at the market table, even if you've only brought a few biscuits. It's your ticket to play in the big leagues, even if you're starting small. But remember, the bigger the seat, the bigger the risks. If things go well, you can win big. But if things go wrong, you can lose more than just your original stake. Used wisely, it's a powerful tool. Leverage can help you achieve your goals faster, amplify your gains, and open doors that would otherwise stay closed. Used carelessly, it can be a disaster. So, while leverage can be your best friend, it can also be your worst enemy if you're not careful. Always know what you're getting into, and use leverage with respect. Now let's see how leverage works in trading. It's a bit like getting a helping hand when you want to buy more than you can actually afford. Leverage lets you stretch your money further, opening up opportunities that would otherwise be out of reach for most traders. Your broker is like the shopkeeper. They lend you extra money to buy more than you could alone. This means you can take a bigger position in the market, even if you only have a small amount of cash to start with. The bit you put down is called margin, your good faith deposit. Think of it as your ticket to the trading game, showing the broker you're serious and have some skin in the game. Suppose you want 1,000 pounds of shares in Cracking Contraptions Limited, but only have 100 pounds. That's a big gap between what you want and what you can actually buy on your own. Without leverage, you'd only buy 100 pounds worth. That might get you just a sliver of the action, leaving you wishing you could do more. But with 10-to-1 leverage, your 100 pounds margin lets you control 1,000 pounds of shares. Suddenly, you're playing in the big leagues, with a much larger stake in the company's fortunes. The broker lends you the other 900 pounds. They're trusting you to use their money wisely, and in return, they keep your margin as a safety net. Your 100 pounds is now working as if it were 1,000 pounds. This means your potential profits and losses are both multiplied by 10. Margin isn't a fee, you get it back when you close your trade, hopefully with profit. It's just held as a guarantee while your trade is open. The broker holds the shares as security. If things go wrong, they can sell them to recover their money. This protects them from losses if your trade doesn't go as planned. Margin unlocks the broker's loan, and the loan lets you use leverage. It's a clever system that gives you access to bigger opportunities, but also comes with bigger responsibilities. It's a simple arrangement that lets small traders think big. With leverage, even a modest account can have a real impact in the market. But remember, the bigger the position, the bigger the swings. Gains can come quickly, but so can losses, and the ride can be wild. Leverage magnifies everything, wins and losses. It's like turning up the volume on your trading results, for better or worse. That's why it's so tempting, and so risky. Handle with care. Always remember, while leverage can boost your gains, it can just as easily amplify your losses. So use it wisely, and never risk more than you can afford to lose. With 100 pounds margin, you control 1,000 pounds of shares. Profits and losses are calculated on the full 1,000 pounds, not just your margin. Every market move is magnified tenfold. If the share price rises 1%, your position gains 10 pounds, a 10% return on your 100 pounds. Leverage gives your ideas extra oomph. A small correct prediction can mean a big profit, but the same goes for losses. You decide your position size, the broker tells you the margin needed, and you open the trade. When you close it, you get your margin back, plus or minus any profit or loss. The loan happens behind the scenes. You just see your margin controlling a much bigger slice. It's straightforward once you get the hang of it. Leverage is like a rocket booster for your trading. Just make sure you're steering. Used wisely, it can speed up your progress. Used recklessly, it can crash you just as fast. The key is understanding both the power and the peril. Simple, right? Let's imagine everything goes perfectly. Cracking Contraptions shares soar 20%. With leverage, your profit is calculated on the full 1,000 pounds position. A 20% rise means a 200 pounds profit. You close the trade, the broker takes back their 900 pounds loan, and you're left with your 100 pounds margin plus 200 pounds profit. 300 pounds total. You've tripled your money. Without leverage, a 20% rise on 100 pounds would only net you 20 pounds. This is the dream scenario. Small capital, big returns. It's why traders love leverage. But remember, the same tool that multiplies gains can multiply losses. Celebrate your wins, but never forget the risks. The market can turn quickly. Now let's see what happens when things go wrong. Suppose the share price drops 10%. On your 1,000 pounds position, that's a 100 pounds loss. Your entire margin wiped out. You close the trade, the broker sells the shares, and you get nothing back. A 10% market drop has cost you 100% of your capital. It's a harsh lesson in the power of leverage. Without leverage, a 10% drop would only lose you 10 pounds. You'd still have 90 pounds left. With leverage, your whole stake is gone. Leverage is a double-edged sword. It can build your fortune or demolish it just as fast. Small moves in the wrong direction can be devastating. That's why understanding the risks is crucial. It's not all cheese and crackers, sometimes it's just crumbs. Always be prepared for things to go wrong. Protect yourself with smart risk management. Don't let one bad trade wipe you out. Respect the power of leverage. What if you hang on hoping things will turn around but the price keeps falling? If your 1,000 pounds position drops 15%, that's a 150 pounds loss. You only put up 100 pounds, so now you owe the broker 50 pounds. This is the biggest danger. You can lose more than you invested. It's like borrowing a friend's bike, crashing it, and owing more than you have. Some brokers have systems to stop this, but they're not foolproof, especially in fast markets. Leverage magnifies losses as much as profits. You can lose your entire investment quickly, or even end up in debt. It's a contraption with sharp edges. If you don't know what you're doing, you can get badly hurt. Always respect the risks. Never trade with money you can't afford to lose. To protect themselves, brokers use a margin call, an emergency stop. If your trade loses too much, your margin is nearly gone and the broker warns you to add more funds. If you don't, they'll close your trade automatically. This is called liquidation. Whatever's left after covering losses is yours, but often it's little or nothing. Margin calls are your final warning. Ignore them at your peril. Adding more money to a losing trade is risky. Sometimes the best move is to cut your losses and walk away. Margin calls are loud alarm bells. Don't sleep through them. Should beginners use leverage? Only with great caution. Start small. Don't be tempted by huge leverage. Use low leverage like 2-to-1 or 5-to-1. Never risk money you can't afford to lose. Only use your adventure fund. Always use a stop loss, an automatic order to limit your losses. Decide in advance how much you're willing to lose. Stop losses are your safety net. Practice with a demo account before risking real money. Learn how quickly things can change. See how margin calls work in a safe environment? Only trade real money when you're confident and have a plan. Be patient, be careful, and you might just have a grand day out in the markets. Good luck, and trade wisely.